Hey everyone, Double P here and welcome. So today's trading session, I attacked Tesla. So let's get into the trade here. First thing we always do is we always draw the box, the last hour of the trading session. So in pre-market you have it. So you see me right here. I drew the box. What is the box? The box is price action. The box is volume, the box is volatility, and the box is support and resistance. That comprises the box. Excuse me. So what do? When Tesla opens up, I'm sitting here waiting for it, and it opened right here inside of the box. So I can see this zone right here. I'm not going to take this trade because it's just barely above the box. Then it opened up, closed, then it starts moving. And right when it starts moving, I'm like, okay, here we go. Just give me a quick second here. Always when I'm doing these videos, somebody is trying to text me. Excuse me. So, what do? We just wait. I'm waiting for the breakout. Like, that's what I'm waiting for. I'm waiting because you always count back 3 candles. Well, I always count back 3 candles as the setup. I want to see confirm the setup. So from here, so 1, 2, 3. This closed up from the box. So I'm like, okay, let's wait and see. This is like a little bit of consolidation, 4 minutes right there. I'm not too comfortable with that, but that's a nice white soldier. Then we got another white soldier. So those are like 2 white soldiers right there, but they got the wicks, but I still consider them white soldiers. So what happens when you have white soldiers? Well, usually you're supposed to have 3 white soldiers, and that will tell you that's a super bullish move. So I count this as a hammer / white soldier. Let me open that up so that you can see it. So I'm just like, okay, I'm going to take it. So right here, I'm looking at this close. And so right here, I send out the trade to my Platinum X Power Option Trader members right around the 337, 338 mark. So as soon as I see that confirmed 3 white soldier kind of setup, we're off to the races. Now, what happens after that next candle? Well, now you got like a spinning top right here. And then you have your inside Harami, which is also bullish, but you see the retracement right here. There's always going to be a retracement. After a move like this, there's always going to be a retracement. Excuse me. So let the retracement happen. And then as you can see, we're off to the races. So what I'll do here is I'll draw the channel for you first of all, because I'm going to show you something interesting. So let's draw the channel. This was channel 1. I'm going to show you something really interesting. People say that you can't use Fibonacci retracements or Fibonacci extensions for intraday trading. I 1000% disagree with that. I understand Fibonacci retracements and Fibonacci extensions are midterm and long-term tools, and you have to understand the law of probabilities, the law of mathematics. The Fibonacci is all the law of mathematics. It's logarithmic. So you have to look at this and you have to say to yourself, if you're going to use Fibonacci on a intraday basis, there's a way to use it, and there's a law of probabilities that tell you it's all mathematics. It's all logarithmic. You can't deny it. So let's have a look at it here. Let me draw the channel here first for you. So here's the channel. There's a reason why I drew this price level right here, 250.03. Right here is when we reached our first major resistance point, and then you're going to see the dip, the retracement right down here, and then the bullish move again to take off. Roughly around 70 to 75% of the time, when you have a resistance, higher highs intraday, and it taps out, and then you hit a high, then it retraces and fails, about 70 to 75% of the time, when it hits that high, the intraday high, it's going to fail. So it's going to retrace and it's going to fail. So what does that tell you? About 20% of the time, or 25% of the time, 18 to 25% of the time, you're going to have an explosion to the upside. So that higher high, when it retraces, it's going to take off and it's going to go for more higher highs throughout intraday. So this is the law of percentages, the law of numbers, right? So keep in mind this level, 250.03. So here's the first channel I drew for you. You see that pullback right there off of this high. Let me get rid of this because you've seen the drawing. You see the channel that the algorithms are trading in. So that's channel number 1. Let me draw channel number 2. That's channel number 2 right there so that you see it. I'm going to get rid of this. This is high level consolidation. Right now, that's high level consolidation right here. All algorithmic, bouncing back and forward, bouncing, hits it for the new intraday high, 251.81. That's a bullish. That's supposed to be a bullish hammer. That's an inverted hammer, and it's supposed to be bullish right there so that you see it. This hammer right here. So that you see the setup. Right? Now, let's come over here. Let me remove that. And let me introduce you to Fibonacci retracements. I can do Fibonacci extensions as well. And you're going to see something very exciting. So let me remove everything here. Let me remove. This is a teaching lesson for. Let me remove the volume profile. I'll remove the hull. And I'll remove the bands. Watch what happens. Let me remove the box. If you were solely trading on Fibonacci retracements, which you can do intraday, I've done it many times. From here, after I drew up my box and Fibonacci extensions, there's the price level. How you can see clearly how eerie this is. 250.02. Price level 1. Let me move this here so that you can see it. Let me just activate the drawing and move it. Where's the 0 point? You see the 0 point right here. Let me move it back. Almost deadly right on. Let me come over here now. How do I know how to draw these levels? How do I know what to look for? You see Fibonacci retracements here. Now look what happens. Off of this move right here, this was the high. What is that Fibonacci retracement? Almost 23%. When you have a Fibonacci retracement that's less than 38.2, which is one of the golden means. So this is 38.2. You see right there, resistance, support, bouncing off that level. When you have a retracement off of the high here, that's a 23.6% retracement. About 82% of that time with a 23.6, because it was a shallow retracement, it's going to take off. About 82% of the time, it's going to take off. And you're going to go for all new time highs. And this is exactly what it did, Fibonacci retracements. Did I use Fibonacci retracements this morning? Yeah. After I put in the box, I put in Fibonacci retracements from this move here, from the opening, from this long wick to that high. That's when I said, okay, here's the high because of this setup right here. Because of this setup, I watched this setup, and this was the first red candle. I always do it on the sell side red candle, because this is going to tell me what type of retracement, what type of move that I'm going to be figuring out where to either exit my position or stay in the position on an upward and downward trend to either exit, right? This is how I do my setups. So with the Fibonacci retracement on that first red candle and that setup, I mark out my Fibonacci retracements and I say, okay, where now is my exit? My exit is 23.6. If I don't exit here and it bounces and it moves, then where's my profit taking? I'm not going to take profit here right at the high, right? I'm looking for another 25%. Hence, why you see me here 25.25%, that's profit taking. I have this all color coded, custom for myself. Right here is profit taking, right? Right there on those new highs, 251.39. Right? Here's my second profit taking. If I was to stay in the trade, 61.8. That's the second profit taken, but I'll take profit right there because you see the setup clearly right here. This is where Tesla's struggling. The 251.39, Tesla's struggling all the way through. But that's profit taken. That's really juicy setup for you to be taking. Let's open this back up so that you see it. Now, could I do the same thing on the extensions? Absolutely. So let's remove the drawing. Let's come down over here. So Fibonacci extensions, we can take it from a low to a high to a low, and that's where I would take it. Actually, let me erase that because I got to take it from this low right here. So we'll take it from this low to that high to the open there. You're going to see something really interesting here. I got to shrink this down here. There we go. This is a lesson. This is a learning lesson from Double P. I'm not telling you to go use Fibonacci retracements, Fibonacci extensions. What I'm saying to you is put it into your trader's tool belt, make it part of your tool belt, because it's deadly effective, deadly accurate. It can show you where the trap doors are, trap doors to the downside, and it'll show you where the elevator is to the upside, right? So off of Fibonacci extensions, what do we do here? Look at where we're taking profit. From this movement right here, which is the 0, what's 50%? There's your 50%. There's your 78.6 to take major profit. If the position can bounce and hit 50%, you know it's gonna run. And what did it do? It ran. There's your 100%. There's your take profit, right? And then you look at this point right here. This is the price level. You can draw your price level tool or use the price level tool for resistance right here. Now, look at the retracement patterns. Once again, what did I tell you? If it retraces, if it can retrace 38 off the high, if it can retrace 50%, 38.2 golden mean, 50% half, it's going to fail because the trend is broken. Momentum snaps first, then trend. Where's the momentum? The momentum right now is to the downside. Is the trend intact? The trend is still up, but the momentum is broken. When you look at this pattern and you say to yourself, 38.2, how many times did it try to hit it? 1, 2, 3 times. Or you could say 2 times and it bounced and it ripped, right? Because it's in a strong trend, the momentum has broken, but it's still in a strong upward trend. So you can technically, if you're looking at the pattern conditions, you're looking at the candles, you're looking at the pattern recognition on the candles, you can stay in the trade. I would have stayed in this trade because I would have used Fibonacci extensions and Fibonacci retracements. Pick one or the other. You can use one or the other, so it doesn't matter as long as you understand what the tools do and you understand how to map out the tools and you understand where to draw them. You can use either or, but I'm giving you a lesson today on both Fibonacci retracements, Fibonacci extensions. Inside of the course for the Platinum X Power Option Trader members, we have modules in there for Fibonacci extensions, Fibonacci retracements. And I go over everything, show you how it works. So I'm not going to go over it now, but it's inside the course. You can go through it. So this is something where you can stay inside of this trade. And there's your take profit. There's 100%. So it extended. That's why it's called Fibonacci extensions. Wink, wink, nudge, nudge. Right? It extended back up to the 100%. And there was resistance bouncing back and forward. You can take that. There's your profit. I would take profit right here because that was a huge candle. It retraced all the way back up there. So I'm out. I'm taking my profit. And then had I want to get back into this trade again, probably not, because I can see the pattern recognition that it's struggling. And this is just a traffic jam. I consider this a big traffic jam right here. Tesla doesn't know what it wants to do. The algorithms are just carping back and forward, and they're scalping back and forward, and they're moving. And then when this opened up, boom, all right, it hits a new high, but it failed, right? And it struggled again to get past there, and it just failed. So you see what's happening now. Now is the position where you can say to yourself, this is a big move right here. This is a big candle. This candle right here, look at what it did. So let me draw this for you so that you can see it. That candle right there, what did that candle just do? That candle and this candle, they basically wiped everything out, right? It's just a big traffic jam. That's how you're going to get killed trying to trade in here. This is only a buck. This is only $1.50 mover or range. Like, you get killed in there. Right? What you want to do is the second that this candle closes, because it's so big and you see what's happening here, you see support and resistance at the 50% level. You say to yourself, I would say to myself, okay, and wait for this candle to close. It's massive, it's huge. Then right here on this movement right here, that's a lower low. I'm taking that trade right there. Because of this candle, the size of this wick, I'm taking that trade. And I'm in that trade. Let me remove the box. Let's look at the range. That was a $1.40 range. So let me remove the Fibonacci. Let me draw a channel for you. So right here is when I would have, and you see the price level. You see the price level right there. It's eerily strange how you see that right there. It's not a coincidence. It's algorithmic. So right here, I would have drew my channel because I'm getting into this trade where I told you I was getting into the trade. Let me draw that tight channel there. Let me move that over there. That's a tight channel. That's what I want to see. Right there would have been my entry to move down. And I would have sat in that trade. So what do I do now? Well, I got my channel. Now I have my new channel. Now here's where I would either have my pivot point set up, or I can freestyle it and use support and resistance using the price level. Doesn't really matter. So off of that move right there, I'm drawing it because I'm looking at resistance, resistance, support, 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 support. That's how you have to look at, and that's how you have to trade, right? So 248.80 is now the new support, and it broke outside that channel. See, the algorithm broke outside that channel. So now I have to say to myself, that's where I would have got out, taken that trade right here. 2, 4, 6, 8, 10-minute trade. That's all I need. I don't need to sit in the trade all day. I don't need to sit in the trade for 2 weeks. I don't need to sit in the trade. I don't need to do swing trading. I don't need to do day trading. I don't need to do position trading. I don't need to sit in a trade for a week. I don't need to sit in a trade for 4 or 5 days. I can make as much money and more getting into a position, sitting into a position, as far as when the algorithms are in their channels or in their slopes, staying in that position and getting in and getting out. So here, out here, that's the out, because that candle is broken. The momentum is broken. The trend is broken because it was a downward trend right here, and the momentum was to the downside. That's my stop, right? Take profit. Now it's a new momentum and a new trend trying to work its way back up. This is a very strong candle, and you see the movement right there, what's going on with Tesla, right? So what do we have here? We have a, this is called a spinning top with a long wicks, right? And then we have two white soldiers forming. So this is a bullish move. So we have two white soldiers. We're going to see where this candle closes, and this could be three white soldiers, a big move back up to, where is it going to move back up to? 250.03, right? So let's wait and see what this candle does to see if my thesis is right, to see how it closes. This could form an inverted bullish hammer as well. So it could be a white soldier or it could be forming an inverted bullish hammer. And if it forms an inverted bullish hammer, then you know this is going to make a move, right? But it's struggling. Now it's looking like it's a gravestone doji, which is technically it's bearish with a gravestone doji. So you have to wait and see what happens with this candle. All right, there you go. That's why you always wait. That's why I always wait for the candle to close, because then that's going to tell me what the formation, what the pattern is. It went from bullish to neutral to bearish. Three different candle configurations. You're seeing it here in real time. Now this is a sell side inverted bullish hammer, but we'll wait to see where it closes. We'll wait to see. I got 2 more minutes, just so you see what's happening. And there we go. All right. This is a inverted hammer, but it's sell side activity. That's supposed to be bearish. You see it bouncing here now. This is a consolidation right here through this price level. Do you get back into this trade? I mean, if you're profitable, why would you? If you're looking for another scalp position, I mean, you got to look at where you're scalping. You're scalping in a range. So let's show you what this range is. You're scalping in this range right here. You're scalping from 248.31 to 249. It's not something that you want to scalp, right? This is congestion now. This is consolidation. This is a consolidation pattern. Let me remove this right here. Remove the channel. So I could draw, which is what I'm going to do. So right there, I have to say to myself, this is something where I don't want to get carped alive by the algorithms, because you can clearly see what the algorithm is doing now. Where this price level is, where the algorithms are looking at support and resistance. And this is all congestion right here. So do I get inside this trade? No. Because I'll get carped alive. I'll get, you know what I mean? Algorithms will, why would you want to do that? You're just going to, they're just pinging. Look, wick, 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 wick. Algorithms are just pinging in a very tight range right there. You can see it. I would want to wait for a breakout. I'm gonna wait for a breakout or a breakdown. I'm not trading that. And you shouldn't trade that either. You should start to look at these patterns, start to look at what's happening, and you become a deadly effective option trader. Stock trader too. Everything I'm teaching you right now, it applies to crypto, Forex, futures, equities, stock, options, everything. Doesn't matter. This is the law. Okay, so that's it from Double P. Hope you enjoyed this end of the day trading recap. I do these end of the day trading recaps so that you can learn, so that iron sharpens iron. I have a mentor that's sharpening me every week. So I'm sharpening you every day, right? This is how you get better. Real account, margin account, stock is in real time, Amex, New York Stock Exchange, NASDAQ, all real-time feeds, equity options, real-time, futures and futures options, I already have it on the platform. I don't need to pay for the subscription. Forex real-time, others real-time, so real-time account. All right, So see where this is right now. This is a nice big one white soldier bullish. 81 cent right now. It's trying to make a move. But again, I'm waiting for, what am I waiting for? I'm waiting for a breakout or a breakdown. So that was a pretty steep one soldier candle right there. But it's struggling, right? There's 250.03. So that's it from Double P. I'll see you in the next trading session. Take care, everybody.